You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, let's do it. It's time for TWIFO, This Week in Futures Options. Let's break down. Let's talk some crude. Let's talk some metals. Let's talk ag. Who knows? Dairy. Who knows what's going to be on the show this week? That's why you got to tune in every week. My name is Mark Longo, coming at you live here, 1:30 p.m. Central, 2:30 p.m. Eastern. That's our live time. You can get that, of course, on Mixlr. Or hit us after the fact on your podcast provider of choice. If you like what you're hearing, leave a review. It helps other people discover the show and just spreads the love for all things TWIFO. And of course, however you listen, hit us up with your questions. We do like to hear from you guys. And when I speak about love and when I speak about TWIFO, your mind inevitably turns to one person, listeners. Yes, of course, I'm talking about the beloved futures options curmudgeon himself, Mr. Nick Howard. This still cracks me up. From QuickStrike by way of Bantix.com. Beloved curmudgeon, how are you today, sir?
Oh, Doing okay. What day is today? Today's Thursday already, huh?
It's a quick Thursday. Week. It's Quick Strike Day. It's TWIFO Day. It's got to be Thursday, right?
It's Thursday. It's we just did this. I just hung up the phone with you. I think not too long ago.
That just shows your life is just speeding by you, sir. Flying by a week at a time.
They go what do they go? The days go slow and the years go fast, right? Isn't that the old person saying?
Something like that.
See, I'm an old person now.
I will allow this show to be the marker by which you track your progress through life.
It's solitaire. Solitaire in the morning is my tracker because I look at the daily challenge and that calendar fills up really fast.
Solitaire in the morning. Is that what you're up to now? That is very much in keeping with the beloved curmudgeon branding. Playing solitaire.
It goes fast. I remember looking at it last April saying, I'm not going to miss this spring. And here we are the next spring already. So there you go. Little insight, little curmudgeon insight.
You're scaring and or depressing all of us. So let's keep rolling. Let's go on. We got to start. We like to start with crude. This week, we kind of have to start with crude this week. Would you agree, Mr. Nick?
Yes, we can do that. Although, it's as exciting as it is. I'm just not sure how exciting it is. But yes, let's do it.
All right, we'll get into it. We'll start with crude then. Of course, the big news coming out this morning and this week, of course, a lot of developments in the crude land. You guys can, of course, follow along. CMEgroup.com/TWIFO is the easiest place to get it. Of course, if you already have the Quick Strike and maybe you want to kick the tires for yourself, Bantix.com. Quickstrike.net are the places to go to log in. QUIKSTRIKE.net. Tell Mr. Nick you heard his beloved curmudgeonliness on this program. It'll bring a smile to his curmudgeonly face.
Yes, it will. Yes, it will.
And let's see here what's going on. By the way, Nick, this will bring a smile to your face. Guess what I'm looking at right now? Guess how I am viewing your Quick Strike data, sir?
Well, two things. I'm unmuted. You're viewing me in an unmuted state, and you're in the dark mode as well, I imagine.
Yeah, so all of our listeners beware. Nick is unmuted, so we know no idea what's going to happen. And then B, yes, I am in the dark. I've gone dark side because of you.
And what do you think?
I like it. It does make things pop out to me a little bit more. I could see, you look at it at a glance. Okay, bam, lots of green. We're up. It makes it, I think, a little bit easier than with the white. And a lot of my other analytics platforms that I use have a black background. I don't know why that is the case, but that seems to be de rigueur in the financial data field, sir. So well done for moving into the dark side. And if you do that yourselves, listeners, and you go to the drop down, you select energy, and go to WTI, you'll see what's going on out there right now. A lot of things happening in Brent as well. Brent hitting $75 a barrel for the first time since October of last year. Of course, the big news in the crude land, U.S. deciding to tighten those sanctions, not give the waivers anymore for some companies or countries, I should say, that were importing Iranian crude. The waivers is going to total a little bit north of 1 million barrels a day out there. So that is lifting crude right now. We're seeing crude coming into showtime up right around 1.5, close to 2 handles. It was at around 66, now about 65 coming into showtime. So up about 1.6% on the week. Also, there were some rumors of some contamination in some Russian oil shipments. That kind of combo is what's lifting Brent. WTI not lifting, again, as much, as up to about 65. Still at lofty levels. You'll be feeling that in the pump if you go to fill up anytime soon. Of course, some people out there who are watching these things for a while are saying, the muted, the bearish, or I should say really bullish impact. I've been talking a lot today, listeners. The bullish impact of this could be somewhat muted because at the end of the day, what have Saudi Arabia and its allies been doing for the better part of the last 6 months or so? They've been cutting. They've been cutting production. So if they wanted to make up that shortfall in Iranian exports, they could do it pretty easily. In fact, the amount they've cut, which is somewhere around 1.3 million barrels a day, does fit quite nicely in the amount that people will be losing from these sanctions. So if they were so inclined, they could make up some of that shortfall. And there are some rumors they may be intrigued in doing that a little bit because they're getting a lot of grief on the broad stage from prices creeping up, not so much from our administration, but others out there as well. Once you start threatening 70, people start to get a little bit, I haven't seen more vitriol of late than when we've tweeted out and shared out articles and analysis about different things about crude prices. People are very up in arms, let's just say. They're kind of maybe taking over for the old gold bugs, who used to be the most vitriolic out there. Now people are very up in arms about crude prices. So maybe they're getting a little bit of heat there. Maybe they would have a little bit of interest in not letting this stuff escalate too much farther. Again, we haven't seen that officially from them, but there are people speculating out there. And again, the cuts they've made do fit nicely with the sanctions. So if the sanctions continue, they could be offset. So let's go in here to see what the impact has been. All this upside, it's kind of a weird mixed bag from a vol perspective here, Nick. You're seeing the front portion of the curve, all the way out here, not quite to D, a little bit before that, obviously, but I'd say a little bit of the front third of the curve or so is looking to get a nice little bump from vol in terms of vol perspective, and the rest as you go farther out, vol actually coming in. So a bit of a weird mixed bag here for all things crude from a vol perspective, which is kind of interesting. Narrowing down a little bit further, let's see here. OI up nearly 5% on the week, so kind of an average week for volume, all things considered, at least from a OI growth perspective. The number one trade here, again, we're coming in at 65, 66 here, coming into showtime. So you might be saying to yourself, I'm thinking upside is leading the charge, and you'd be close to right, very ever so close. The number two trade are the 70 calls here in June. Nearly 14,000, 13,778. They're close to number one, but not quite number one. They were trumped by not even 100 contracts, 13,854 of the double puts out here in September. So the 55 puts taking the number one spot this week. So listeners, if you're saying, hey, I thought it would be all upside given the rally, close. Number two comes on the call side, but number one firmly on the put side, listeners out there in September. Let's go back here to June and see what else we got lighting it up out here. Number two, the 70 calls. Then number three, hot on its heels, pretty close, nearly 10,000 of the 63 puts. So a lot of puts lighting it up out here this week, which is maybe a little bit surprising given the nature of the paper. We've seen maybe some people coming back to speculate on what we were saying earlier about how maybe some of these sanctions could be undone by a reduction in some of the cuts. 62 calls also getting some love, this time out here in June of 2020, 8,200 of those on the tape. The lion's share actually coming today, 3,100 of those today, 2,800 on Tuesday, 1,500 on Wednesday. So looks like some interesting, maybe looks like today a 62, 65, 70, bit of a funky ratio here. You got the 62's going up 3,100 times, 65's going up 1,400 times, and the 70 calls going up 950 times. So the size doesn't really line up at all, but it all went up today. So maybe there is something afoot there with some funky three-way verticals out there. But Mr. Nick, a lot going on in the land of the old Texas T, WTI about 66, crude hitting 75, Brent, I should say, hitting 75 for the first time in a while. Vol kind of weirdly mixed. What are you seeing out here in crude land this week as I toss to your unmuted microphone, sir?
I like the unmuted microphone. I feel free. It's like I'm just sitting here in briefs with an unmuted microphone.
You're conjuring terrifying pictures for our listeners. Don't let the freedom go to your head, sir. That's all I'm saying.
Well, that's how I feel. So if anybody wants to know, that's how I feel. Well, I think that the important notice that I have is that you mentioned there's a little bit of a uptick in the at-the-money vol, but across the board, it looks to be red or down. But what we're seeing there is we see a little bit of a shift up. If we look at that shift in the slide column, again, that's kind of the go-to of late to see what volatility sort of quote-unquote really doing. And we're seeing that we're sliding into the belly of the vol curve. So as we start to approach, right now, what are we, 66, 65.30, 65.30 June, July, something like that. As we move up a little further, we're going to start to reach that low vol point in the curve, which is the 69 strike. So the 69 strike is about the 25 delta. So right now, looking back historically at that place in the curve, the 25 delta, vol is not at historical 5-year lows or anything like that, but it's approaching lows. And, it was lower when we were up at 90. So I would say that, given that where we are in the futures price with that volatility, it's pretty low for the levels we're at. So sliding down the vol curve. So as much as we're up, we're still sort of there's really not a bid to this market. And I would say that it's time to start looking, the curve is shaped well. We're rolling along the curve, with like I said, with a little bit of a shift, but it's a smile curve. We're not that the money's not in the base or the center of the smile in the belly, but that 69 strike is the belly. And if we kind of keep grinding along here or grinding a little bit higher each each week. We're going to see that part of the curve get cheaper and cheaper, and at some point, that's going to become a play in terms of a long play, regardless of what direction the market goes. So keep an eye on the belly of that. Well, the June is under 21 days, so I'm tending to start to stay away from that. And as we get through the weekend, we'll be, inside of, we'll be at like the 17 or 18 day mark starting on Monday. So the July with 53 days right now, still 50 days when we come in on Monday, you're going to see some opportunity there. I think if we don't see any significant move on the upside, we're going to see vol get softer, and then you're going to have the ability to get on some long plays here in the belly of that vol curve. That's kind of the big notice right now. With that shift down along the curve, we're going to see that the puts are going to be a little bit in the quick skew. Puts are a little bit less expensive, and the calls are a little bit less cheap. But that's what's happening as we're moving into that belly. Eventually, they're going to kind of flatten out, and even if we make it up to the 69 strike, it's going to be pretty much an indifferent point in terms of the way the curve is shaped. Probably start to get a bit to the calls at that point, but I guess the moral of the story is pay attention to that vol. Probably going to get cheaper if we keep going sideways here, but there's some opportunity at 68.5, 69, 69.5, 70 strike range.
Lots of opportunities, including for you, Mr. Nick, with your free and unfettered mic here in your boxer shorts, boxer briefs. I don't know what you go for, but
yeah. Well, that part we'll leave a mystery,
yes.
Right? Some
things must be left to the imagination, but not for our next product.
Could be any number of things.
Yeah, Mr. Nick, I will give you unprecedented power, sir. It could be lean hogs, could be crazy fluid, whatever the heck floats your fancy. Which product should we break down next?
I don't think I want to do lean. I'm telling you, I have agoraphobia. I know that's just a bad play on words, but I just have agoraphobia. I don't know what it is. It's just like the farmers scare me and the ranchers scare me because they just, they know their job and I don't know their job. So I like to stay away from it. Let's look at, surprisingly, let's look at the 10-year. Let's just take a quick look at that, because I think that part of the reason I want to look at, we had a little bit of a move higher over the course of this week with the future, so lower yields, higher futures, and I think there might be some opportunity there coming along as well from the way things are shaping up from a vol standpoint.
How did I know you were going to lean? Maybe either metals. I was thinking metals, or maybe rates. And
metals always. I have metals. Love talking about. But I figured I wanted to do. Since you don't know if I'm in boxers or briefs or whiteys or thongs, I figure I throw the 10-year in there. You never know, right?
I know agoraphobia is fear of the outdoors. What is agoraphobia? Is that just a fear of ags? I don't know what.
I just made it up.
I like it. I think we should go with it. Agoraphobia.
I have a fear of the ags, just because I don't. It's weird. It's like, if I didn't know Eurodollars, I wouldn't talk about Eurodollars, because it's just a weird product, I think, just in terms of how it trades. And the ags, I don't know. A lot of stuff goes on there, a lot of inputs that we could sit there and talk about things, but I don't know how much it really, we'll get to it, but You're not
up on the farm beat. Tell you what, I'll rotate in some farmers for us. We can get that live. People who specialize in the ag, so we can get that live. We'll cure you of your agoraphobia. Either that or you're afraid of aggression, too. Agoraphobia could be that as well. I don't know. We shall see. Let's move on.
That I know is not the case.
Let's see here. We got the 10-year. Again, cmegroup.com/TWIFO. Go on down to the rates section, then get U.S. rates. You can go foreign if you like, but we're talking U.S. rates here. And down to the 10-year, you shall see what we see here, hopefully in dark mode. Coming in here this week, we're seeing the futures up slightly, about 0.2% here on the about 123, almost an eighth, not quite to do the old fractions, not quite an eighth, but close. Here, so you're talking like 123 half strike is where we're looking out here right now. Vol kind of also catching a bit of a lift here this week as well. Up pretty strong on some of these near, again, you're talking strong, we're talking nearer duration contracts within a week. So a lot of that is kind of gamma and theta kind of kicking in there as well. So I hesitate to call that vol. But looking a little bit farther out, you're still seeing vol up a quarter of points in, shall we say, more measured contract out there. So a little bit of a pop out here in vol land, which is kind of interesting. Looking at the numbers, again, the volume out here is just on a different planet compared to something like the lean hogs or even like the gold and other things. It's just a lot of paper out here. And if you said to yourself, I'm going to look at right around the at-the-money call strike is where I think the action is going to be this week. You are indeed correct for a lot of it. Remember we were saying earlier the big prints, even in WTI, were around, somewhere around 10,000 to like 13,000 contracts. Here we're talking the number one spot in the 10-year, the 123 half, which is around the at-the-money call strike, almost 120,000 of these bad boys going up this week. 119,687. The lion's share coming on Wednesday, 46,000 and change going up on Wednesday. 34, almost 35,000 today so far, and 22,000 on Tuesday, 16,000 on Monday. Kind of puts in perspective some of these other products you talk about. I mean, this is some paper. It's doing some paper out here. A lot of it. Number two here are the 124, so nice little call strip, 123 half, 124, 90,000 of those coming in hot and heavy at number two. Looks like of all the paper, about not quite half, 41% coming in this contract here that's expiring. This May contract that's expiring in not a weekly. The May contract expiring in a couple of day here. I got a day left here on this one, so kind of interesting. The size of the paper that's going up here, Mr. Nick, 80,000 almost of the 123 puts also in that same contract. So just a paper palooza, I think you can call it out here, Mr. Nick. Anything of note catching your eye here, sir? There's so much paper we could talk for days.
Yeah, the reason I wanted to bring this up, I think, is just, you're starting to read, whenever I start to see a lot of the news about, there was just an article about how this is playing out like 2017, where it just pays to be short vol, right? It's another period of time where short vol is going to be your winner. Short vol is going to be your winner. And whenever I see that, then you got to take a look and see where vol is, right? And just kind of see what the general sense is across the different asset classes. And the reason I want to go 10 years, because I think this is another example of a product that's going towards or trending lower and moving towards lows it hasn't seen in a while. Now, we've seen lower lows very recently in the 10-year, but the last period of time we spent, this 30-day contract, we spent a lot of time, like a standard deviation outside the first standard deviation, maybe even into outside the second of where its vol has been over the course of 5 years. Okay, so whenever you start to see these, the article's talking about low vol, you got to pay attention. When you start to see low volatilities, and in this case, I feel like, again, just being a watcher and not being a macro guy or anything like that, it just there was really no reason, given where the market was, for where the stock market was and stuff like that, for the treasuries to even move back up to where they were, and they're approaching not necessarily the highs that they saw when we saw that big spike up not too long ago, a few weeks ago, maybe 4 weeks ago. But, we rallied back up there. And whenever we rally towards the top end of a range and volatility gets low, there's always to me, feels like there's opportunity to do those mini straddles that we talk about. So it's just something I wanted to mention, to pay attention, go out there and start looking at what the vol curve, how it's shaped. And I can tell you how it's shaped and you could see this too. In the TWIFO, it's got a pretty standard smile right now. We're sitting right in the belly of it for the most part. So we're around the lowest part of the curve, and there's sort of it's shaped the same on both sides for the most part. So you start to believe that we can go generally in either direction. The 25 delta calls have a little bit of a bid to the 25 delta puts, but more or less they're pretty similar. So just wanted to bring it up, kind of moving down in vol, trending lower, kind of staying lower. We moved higher, maybe when we shouldn't have. So you start to pay attention to that upside, see if you can get something cheap and maybe play. If we continue to go higher, you win on the bet that we go higher and the vol pops because the vol is lower. Or if we go lower, you're playing that delta game where you get your money back without too much of a move on the downside. So just wanted to make sure that Treasuries gets talked about from that standpoint, that with the potential for some tradable gamma options, and specifically, I'm always looking at least a 30-day. I'm looking at the July 10-year that has 57 days. But if I look at the I look at the June, which is around a 30-day option, same thing, trending lower at or near lows, and some potential opportunity there for some gamma plays.
Tradable Treasury Gamma. I like it. Say that 5 times fast. I dare you.
Tradable Treasury Gamma. Tradable Treasury Gamma.
There you go.
That's 2. Tradable Treasury Gamma.
Speaking of things that are tradable, sir, I think you like to look at least some gold. So shall we move on to the shiny stuff? We get a little shiny, get a little precious. If you want to call me precious, I wouldn't hold it against you. My precious.
I know you like those. I know you like those references, those sci-fi references. Go ahead, have at it.
I do like a little. You can throw a little Lord of the Rings in there. I wouldn't look askance at it, sir. We had people on the other day for one of our other shows. We talked a little historical about the fall of Constantinople. These things bring a smile to my face, sir. Like things bring a frown to your face as a beloved curmudgeon. These things bring a smile to my face. And what's maybe not bringing a smile to the gold bugs' faces this week. We're up a little bit, Nick, but certainly not enough that they would be happy. We're at we're still shy of that 1280 level, 1279.81, up about 3 handles, about 0.25% net on the week, but still at or around 4-month lows here for gold. Seeing durable goods information, some others coming out today, not really coming in to deliver in the way the gold bugs certainly hoped, kind of leaving kind of a resounding meh, as we like to say on the network here. New durable goods orders up by nearly $7 billion, about 2.7% last month. That's up from February's decline of 1.6%. That beat expectations. People were thought, given the fact we've seen so much dire news out of the manufacturing sector here in the U.S., places like Boeing and others, big contributors to durable goods, thought that would have problems, so thought that number would come in lower. Actually beat expectations, so that was probably a bit of a surprise. And but still, none of it really having a lot of impact here in gold land. Looking here, like I said, up about 3 handles, not even 5 handles. Threatening the 1280 strike, not quite getting there. Volatility, kind of a mixed bag again. Near portion of the curve catching a little bit of a bid. Longer term, kind of taking a little bit of a break. Farther, much longer term, out here past in middle of next year or so, catching a little bit of a bid of again. So kind of a 3-point inflection curve from a vol perspective looking out here. Let's go a little bit farther over to see what is lighting it up out here in gold this week. Kind of a paltry week volume-wise and open interest-wise for gold, only up about 2.6% open interest. A lot of the paper looks like almost half, 48% of it coming in the June contract for this year. And yet again, listeners, we're just talking about those crazy numbers in the treasuries. Gold doesn't do as much. Talking about not quite a tenth of the paper for the number 1 spot. It was a 12.5 put, so actually a decently out of the money put in June. So that maybe shows some interesting concern and or trading activity to the downside here. About the big day is on Tuesday, nearly 3,000 on Tuesday, 2,000 on Wednesday, 1,700 today, and about 800 on Monday. All that for about 7,200 opening on this strike. So maybe some downside harvesting, maybe some people freaking out that there's more downside to come here for gold. Either way, puts leading the dance out here this week. Let's see what else was tearing it up. 1,300 calls, so a little not that bad of a risk reversal. 30 points to the downside, 20 points to the upside if you are inclined to look at such things. 1,300 calls doing about 5,000. 1,400 of that today, 1,400 yesterday, 1,200 on Tuesday, and shy of 1,000 on Monday. Again, also opening. So interesting paper on both sides of the front. So if you're perhaps a gold bug, you got something to look at there on the 1300s. If you're a bit of a gold bear, 12.5 puts are going to be front and center for you. Interesting stuff. Sorry, I like to parse this stuff because there's always interesting nuggets to be found. Speaking of interesting nuggets, this is why listeners like to look all the way out and see all the expirations, because when I do that, I see fascinating things like this, which are actually all the way out to June of 2020, listeners, so over a year from now. And I mentioned number 1 is still the 12.5 puts, but only by a wee bit, because that was 7,270 of those. And actually slotting in at number 2 are the 1475 calls, doing a fair amount of paper, 7,250. So a whopping 20 contracts less than a number 1 spot, putting him firmly in number 2. So June 1475s on Tuesday, doing 7,250. All of that opening. Also worth noting, the 1300s went up at that same time for 2,000, also opening. So we've seen people before have a bit of a penchant for upside ratio spreads in gold. 1,300, 1,475, but that was to be the case. That is certainly a lot more reasonable than we've seen people playing of late in the 1700s, 2000, 3000 strikes. So going out a year, not quite, not even 1/3. It's a funky ratio here, Nick, if it is indeed but it went up the same day, opening on both sides. So I'm inclined to believe that they are related strikes and related paper there. Interesting stuff, Mr. Nick. Longer term upside ratio is a lot to see this week in gold, even though the price didn't really pop a lot. Anything catching your eye out here in the shiny stuff this week, sir?
Yeah, I mean, this is another one of the same things. I just tweeted out. I added you on it. The 30-day and 60-day constant maturity volatility for gold is at 10-year lows. So, and it's been trending. I mean, it's been trending down. I mean, since you can go back and look, and we've been trending down pretty much since the beginning of 2016. But it has had its spikes as we've moved along. And let's see, when is this? So we got a June spike, another one. So So again, I mention it because you have to pay attention when you start to get a 30-day option in gold under 8%, which is where we are right now. The 60-day option is almost, that's the July contract, that's at 8.25, a little bit above. You don't have to do much to get your money back on this stuff. So you need to pay attention to those and see if there's any opportunity for you. I mean, the one thing we did notice, the one probably most important thing to notice here is on the June contract, which is just over 30, we had the shape of the curve. The puts got more bid, the calls got a little bit less expensive, but the puts moved into positive territory in respect to the at the money, whereas they were below the at the money last week. So, we're starting to balance out that curve as well. So, the puts were offered, and the puts are still offered out on the vol curve. So meaning there's still that bias towards a move higher, but we are, when you see that, you start to look at what our range is. We're not quite at the bottom, but we are near, like in the 1260s. I start to really pay attention to what I can do to try to play a reversal in the direction of the gold there. And given the low level of the volatilities right now, it seems like this is another one. So we talked about Treasury, we talked about crude vol was kind of low, Treasury vol is pretty low, and gold vol is really low. Now, again, go back to these. Whenever the newspapers and everybody starts talking about low volatility, that's when I think you got to start paying attention some more. Now, there's clearly times where you can be short vol all the time, and it just keeps going lower. But this is one you pay attention to, and you could be short, but I think you got to really watch yourself on this, because there's probably some good stuff you can do, longer dated stuff where you're going to get your 60-day. I know that on that 60-day option, if you do some sort of mini straddle, you will get your money back if you just look at the average. If you look at this, let's see. Let me look at this over a period of time just to get a little bit of perspective. So if you look over the last 3 months on the gold contract, we've gone from 320 up to 1320 up to 1360, down to 1300, down to 1285. So there are moves in this 60-day period of time that you will get your money back on those trades. So again, something to pay attention to. I like finding value in the options, and I think there's some value here.
There's value in many sectors, including, sir, the equities. Our buddy Sean, I believe this guy's travel schedule is unbelievable, Nick. I think he's in Amsterdam this week.
I think he's picking up one of his boys from.
He is. Yeah, so the guy's all over the planet. Literally, if he's not here sitting next to me, he is in some other hemisphere, chances are. So he's like Asia. He's over in Europe. He could be South America. You never know. It's like we need a map. Where in the world is Sean this week? So no delicious steak and/or burger buffet here. So you didn't miss that, Nick. You can bring your somebody. We have a much more subdued buffet here if you like, but we could do such things. But let's hit on some equities because things are popping off out there as well. Coming into showtime, we're seeing vol up slightly, which is kind of interesting because not a heck of a lot going on in the broad equity indices today, or indeed even this week. We're seeing, of course, everyone's waiting on earnings, and earnings are kind of driving the micro picture out there. By the way, Nick, it's kind of refreshing I know you're not a huge equities guy, but it is kind of refreshing to be able to, in the equity space, focus on the micro for a change, not just the macro currents and everything else. Speaking of micro, we'll get to those in a little bit, the micro futures. Everyone's excited about that. But we'll get to that in a minute. But isn't it refreshing, Nick, to be able to focus on, let's say, Tesla earnings or Facebook? Pick your poison rather than the he said, she said dance of trade wars, et cetera, sir.
Oh, isn't it? It is nice, right? It definitely, it's a little less taxing to talk about that
it is.
Simple stuff.
You have an actual number. Will they beat it or will they not? It's pretty straightforward. That's nice.
There was some interesting earnings things where people where some of the companies beat and met revenue and still got hammered. So I was because I don't know much about that. I was asking some questions about that. So there's I think the market. I think some of the equity, some of the individual issues people feel are a little bit overvalued. So any chance they could to take some meat out of those, they did.
Yeah, big names like Tesla obviously taking a drubbing. They had expected to make a profit this quarter. Instead, nope, they posted one of the worst quarters. I think the worst quarter they've ever had. So people are calling it a quote-unquote debacle. Price downgrades across the board. They're actually talking about raising more outside capital for the first time after he swore that he wouldn't do that anymore. So, a lot of things going on in Tesla land. The defenders are out in force. As always, a lot of volatility, a lot of action in Tesla land. All this is resounding in a little bit of a uptick today. Not a huge one. But coming in today, we're seeing the VIX at about a 13, so up about 3/4 of a handle from where it was this time last week on the show. We had about a 12 1/4 last week. And RVX, which is, of course, the small cap VIX, not quite 17, 16 3/4, also up about 3/4 of a handle. So guess what? RVX and VIX both up 3/4 of a handle. That spread didn't move at 3 3/4 was pretty much unched from where it was this time last week. Let's go jump in and see if anything's lighting it up out here in the E-mini Russell 2000. Like we mentioned, kind of a quiet week, even though the Russell's been moving a little bit. Russell is up almost 1% net here on the week. So Russell's been catching a bit of a bid, even outpacing some of the larger indices. It's kind of a weird week. It depends where you're focusing your attention in the equity space. If you're looking at a NASDAQ, if you're looking at an S&P, if you're looking at, maybe smaller cap, or maybe looking at Dow, kind of some of the old school names there, you're having a little bit of a different performance trajectory this week. It's kind of a bit of a bifurcated market out there, even trifurcated, giving these different names, even quadfurcated. Let's make that up. If you throw the Russell in there. Let's look really quickly at the E-mini S&P as well, see if it's a similar story. Not a lot of bias here in the Russell paper that we could easily look at. Let's look here to the E-mini. Again, select all. I'm a big fan of selecting all, listeners. It can be overwhelming, so prepare yourself. But I like to see it all.
Too much.
See it all, Nick. And here, the weeklies. It's funny how the equities are so much the polar opposite of a lot of the other contracts you talk about. We're pretty much all the interesting paper is in the weeklies. If you get beyond the weeklies, it's a different beast entirely. And once again, 2,900 puts, so near-term out-of-the-money puts expiring in a day are dominating the tape, listeners, with about 13, almost 14,000 of those. I'm going to do a quick scroll here, but yes, that is the number one big trade of the week. A lot of that opening. I'm going to go out on a limb and say a lot of that is still the old premium harvesting. People like that across the board. Pick your index. They still like to harvest the old risk. They harvest the old risk premium, and that seems to be the case here in the E-mini as well. Speaking of, you talked about micro before, Nick, and how nice it is to focus on micro. People are focusing on micro a lot in the equity realm as well. I know Sean and people at Footsie are really excited. I know CME folks are super excited as well. They always want to have new stuff for the retail to sink their teeth into. These micro E-minis, we have a date now, Nick. They're always talking about May. It's going to be May 6th. So remember that, listeners. 4 markets coming up. It's going to be the S&P 500, the NASDAQ, the Russell 2000, obviously, and the Dow. So the 4 indices you like to sink your teeth into. If you've been saying to yourself, I like what's going on out here, but these regular E-minis and the big contracts, a little bit too meaty for my taste and for my needs. They got you covered now. 1/10 size E-mini futures. Those are coming May 6th. So in a span of a couple of shows here, we'll have those listed. Unfortunately, no options yet. So from our perspective, got to wait and see a little bit. But again, all the people out there, they want more bite-sized stuff. We see it. We see it in what you trade. We see it in what you write to this show. Clearly, Footsie and CME have seen it as well because you guys have asked them for it because they're listing it. So May 6th, we're going to be seeing all those. I know Sean's pretty giddy. As giddy as he gets about delicious burgers, Nick, he gets even more giddy about the micros. So hopefully we'll have some interesting stuff to see. Maybe some interesting trading back and forth between the two there as well. Before we get some of your feedback, let's see what else is lighting it up here this week on the old CME platform. The top movers and shakers here. So again, this is talking just straight up what's lighting it up here in the futures, in the underlying. We're not talking from a vol perspective or change in skew or anything like that. We can get down that rabbit hole, but we do that more in the individual products. Net, let's just look at what's lighting it up here this week. Number one to the upside are oats. Oats, about 3.6%. Number two, lumber, about 2.35%. By the way, Nick, I think I told you before, this chart looks a lot cooler in the dark mode. Don't you agree?
Oh, gosh. I agree. Yeah, the charts in the dark mode are just super cool, for sure.
You can see the gradients a lot easier than I think you can on the light side. So I'm going all dark mode, particularly for the charts now going forward. Number three, we got the Brent. Brent up about 2.07%. Number four, Eurodollars. Number four, RBOB. Gas, 1.97%. Number five, Mr. Nick, your old stomping grounds of the Eurodollars. Up nearly 2%, 1.97%. Now let's go to the dark side, which also jumps out. Looks like a nice Sith lightsaber here to the downside. The lean hogs, a big red bar, off almost 7.25%. Nick, I know you and I can't make heads or tails of lean hogs, but that's a big move. So maybe
it is a big move, right?
We'll have to go out there and see what is lighting it up out here in lean hogs to cause such a catastrophe here. And then we got number two, we got live cattle, number off nearly 6%. So livestock taking a drubbing this week, Mr. Nick. Number three here, we've got feeder cattle off nearly 4.6%. Number four, got soybean oil off a little bit, off not quite 4.25%, about 4.13%. And number five, we've got here, rounding out, KC wheat, number five, a paltry 3.5%. So yeah, the livestock and the animals taking a bit of a drubbing here, Mr. Nick. Are you feeling adventurous? Should we go out to those parts, look really quickly, or is that too terrifying for you, sir?
Well, pull it up. Tell me what you want to do, and we'll take.
Right,
that's why we built the report, so we don't have to prepare too much.
Exactly.
We just have to.
Let's do it. I'm going to go out into these uncharted waters. I know you have agrophobia. Maybe you have lean hogs phobia as well. If you want to find this for yourselves, listeners, click on the ags in the drop down. Then click on not grains and oil seeds, but livestock. And then we're going to go. Which one do you want, Mick? Live cattle, lean hogs, or feeder cattle? Pick one.
Let's go porkophobia.
Hog love. Hashtag hog love. We got it here.
Hogophobia. Yeah, that's better.
I'm going to select all again. Won't be as intimidating as opposed to like the Eurodollars or the E-mini. A little bit easier in the hog land. All right, let's see. Like you mentioned, the hogs off nearly 3%, 2.7% here, at least for the front contract. Other contracts taking a drubbing. The second contract off nearly over 7%. So yeah, big beating out here in the hogs, depending on where you're looking in the term structure here. In terms of so we're at about a 87 3/4 in the front contract, about almost a 90 in the second contract, which is about 50 days to go out there. So we're looking at all these shy of the 100 level, yet it is the 100 strike that is lighting up the tape here this week. In particular, what we got? We got the June pars 100s going up 3,200 times this week, listeners. With the 3,200 slightly biased towards closing, actually. So kind of interesting. So back and forth on the par strike here in the front month. Then let's go. We drop off a little bit to number two, 1,500 of the 112 calls. Interesting strikes. With most of those 950 coming on Wednesday. A lot of that opening. And then we go down to the 80 puts. Perhaps a more reasonable strike given what we're seeing out there. About 1,500 of those as well. The lion's share, nearly 1,300 coming on Tuesday. Good chunk of that opening. So we're kind of seeing some interesting bifurcated paper. Then we go all the way out here to the 94 calls. When are these? These are in October. October 94 calls. Doing 1,100 contracts there as well. Mr. Nick, pretty much a good chunk of that opening, 862 of that coming on Tuesday. So big prints earlier in the week on Tuesday for some upside here in the hog. So they're selling off hard, Mr. Nick, yet we're seeing a lot of upside lighting it up. Anything catching your eye in the hog slipping and sliding, sir? Oh, the vol, by the way, I didn't break down the vol. The vol also off quite a bit here, which is kind of interesting. Again, the polar opposite of what our equity-minded listeners come to think of with volatility, sir.
Yeah, I mean, the vol is just, well, part of it, the market's closed, so we might be getting some wide markets here. So it's hard to say exactly whether that front contract, at the end of the day, people pull the market. So we get when we're using the mid, we might get a curve that looks a little bit out of whack. And I would say that front May contract probably is not right in terms of how hard it's been hit. But what the one thing that I find with the hogs, I think especially maybe with the cattle stuff too, is the quick skew. We use that to look at trends in skew, right? To see if something is overpriced or out of whack, or if it's at extremes and stuff like that. But what I see with the hogs in particular is that thing will shift back and forth across at the money, and I think that's what scares me about it, is because I don't understand that. That skew, and maybe we get somebody on who knows hogs better than us, and they could talk about that. That skew seems to whip around a lot, and that in and of itself, there's opportunity there probably, but at the same time, there's also opportunity to get your face ripped off on something like that. So unless you really understand what's happening, that's why I tend to, pork myself on the sideline, so to speak.
Look at you and your puns. I will say this. I've known a few guys over the years. Most of them have come in from like the world of equity and index options who've tried to break into other products. As I've heard, it works in different commodities, corn and others that are liquid, Eurodollars, E-minis, obviously. But then I know several of them who've tried to go out into things like the lean hogs and the livestock. And some of these guys are pretty serious dudes who know an option from an option. And they've come back to me and be like, I can't make heads or tails of any of this. It trades on appointment. Like you mentioned, the skew whips around all over the place. If you don't know what's going on, you can get your face ripped off really quickly. So they are some turbulent waters out there in the hogs. Maybe tread carefully, listeners. But interesting stuff from a net volatility and skew and aggregate trade perspective. Things are moving out there. So if you want a place that's where things are moving, they're delivering that for you. Whether or not you could stomach the funky hours, the crazy swings and skew, that's up to you. But interesting stuff nonetheless here on the old. See, listeners, you ask and we shall receive. No one even asked for this one. We just thought it was kind of fun. So a little bit of hog love for you here this week. Hashtag hog love. All right, let's keep on rolling. Let's get some of your love here with a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. Let's see what you guys have on your brains. First up, DeSanya, I suppose. DeSanya? DeSanya? I don't know how I pronounce that. Let's go for DeSanya. Asking, can you get the dairy folks on the show from CME? Also, is CME planning to list more crypto anytime soon? Well, we've talked a couple of times about the different product heads out there coming on for different areas. The dairy, not a lot going on the dairy, or at least I should say there hasn't been. So they haven't really, had anything to come on to talk about. That said, that narrative has changed a little bit. I was just noticing here some data coming out of CME. I believe this was even last week, actually, where they're actually talking about dairy for the first time in a while. They said, I think this was last Monday, marked 4 consecutive record open interest days for non-fat milk futures and options, surpassing 34,500 contracts. Nick, you even obliged them with a little bit of the term structure of volatility, putting that out there on dairy. Do you have? I know this is not a super huge one, but do you have a lot of people on your platform who are really tracking and trading the dairy? It seems like it's starting to come to life a little bit.
I have a whole there's a whole set of brokers. There's a particular FCM group that tracks and watches obviously pretty closely. So I know of one group that if we could talk to one of those guys and see if they want to come on, because they have some good insight. Like there's some weird stuff with the dairy, like inside a certain number of days they stop trading that front contract because the delta changes and how it reacts to things. There's some strange things. So it might be, I don't know I don't know if anybody at the CME could give us any insight into how it trades. So we might want to get like a IB or something on there that talks to the customers. But that's another one where unless you're really like, I wouldn't just waltz in and start trading, class 3 milk or whatever, or whey or the cash settled cheese. It just seems like a tough one to follow because there's a lot of nuance, I think, that people don't really expect. And with it being so with it being so low volume, well, that's a liquid. With the volume not being all that high, you might get into something that you don't know how to get out of or not able to get out of because I think it's a pretty close-knit market. But
yes, it's a brave or perhaps a foolish man who just wades into the dairy without really preparing himself ahead of time.
If they had a Cheez-It future, I could probably make
huge
prices in that. Because
Doritos, maybe. Doritos, maybe even a Frito. Not really dairy, but still good.
Cheez-Its, and then they got the Cheez-Its crisps now. Those are popular in my house. So
there you go.
So I think I can make a two-sided market on the Cheez-Its.
I hear Cheez-It and Sun Butter big in the Quick Strike offices there. So
cash settled Cheez-Its. That's what we have over here.
I'm down for that. I like it. As the kids say, I'm here for it. Let's see here. Next up, we got Berg Lover.
You didn't answer the crypto part of that because I thought it was ironic that there was milk with crypto.
Yeah, you're right. I forgot all about. You're right. That is a weird combo. Yeah, you're right. You've heard me on this show, DeSanya, everyone else, asking them point blank. I think we just had Tim on who oversees the crypto complex back in FIA. So like less than a month ago, I asked him that exact question. I was like, hey, when are we going to see some more crypto? I had these guys on panels with me at various events, including the Voice of Blockchain last year. I asked them the same question there. It seems to me, all the indications I'm getting from them, obviously SIBO got out of that game, so they're not going to list anymore for a while. CME, clearly the winner in the crypto future space. It does seem to me that the interest from their side is in listing more underlyings first, so maybe an ETH future. Or maybe, who knows, XRP, one of these other big names out there, Litecoin, one of those, probably first before we're going to see options on the futures. That said, Nick, I'm not sure if you've been following along with the crypto space. There's a lot of noise, a lot of Sturm und Drang about how much volume is actually real in the crypto space, and a lot of data saying a lot of it really isn't, in which case the futures actually account for a lot more of the actual volume trading than you might think. So if that's the case, then I think maybe we'll see options hopefully sooner rather than later. But I don't think that there would seem like any impetus. But that said, I didn't think they're going to list a future, and then they did. So crazier things have happened. If I had to speculate, I would say probably more futures first before options. But hey, I'd be super excited to see an option on the futures.
I'd go even like I've said it before. Well, first of all, we said a long time ago CME was going to hammer SIBO. They tried to come out a week early, and then But I think you got a better chance of seeing, like you said, other futures, lower coin denomination futures or micro coin denomination futures, right? Because if you get to the micros, then you can trade fractional Bitcoins, and you're really starting. I think there'd be huge volume in that. I just really think there'd be huge volume in that. So, and that would, I mean, the other spot exchanges would have to exist, but because they're feeding the Bitcoin real-time index that the CME is using to create the future. But I think you'd see some really interesting stuff going on there. I would love for that. I just think I think the micro indexes are going to be enormous, and
it does seem like that's a lot of potential for those. And the same complex, the same guy oversees the equities and the crypto. So yeah.
No, right. It's that's the thing. And it's my understanding that down in South America, the micro equity futures contracts just trade gobs and gobs of volume. So, I would think the SPY's got something to be afraid of here. And then if those micros get options on them, oh my gosh.
Interesting. Yeah, that'll be obviously something we're waiting for. But you're right. Different parts of the world, they like their, shall we say, more bite-sized contract size. Yeah, I would be happy to see a smaller size.
They like their tapas.
Yes.
They like their tapas down there. The tapas futures, right?
I thought we were going to
small plates.
I thought we would see you're right. They do love good tapas, and I thought we would see a smaller size future a while ago, and then I think the sell-off helped kind of do that job for them, right? Going from 20,000 down to we're around 5,000 now. That's a much more palatable size for a 5x contract, right? Yeah, if it hadn't sold off, it was still around 20,000 north. I probably would have seen a micro size or smaller sized, Bitcoin future out of CME probably sooner rather than later. And now they've had the sell off do it for them. But yeah, I think we're going to see some micros. That's probably a good prediction there as well. Berg Lover chiming in. I guess this is his commentary. I'm supposed to read this in his voice, I guess. So he says, the market, oil prices up over 50% year to date. The Fed, inflation, ? We don't see it. Better cut rates.
You should have read it like the Hamburglar.
Yeah.
Right? Because then it would be, you wouldn't understand it at all.
He makes no sense.
Mumble.
Isn't he kind of like the parents on Charlie Brown? You can't really understand a word he's saying.
Yeah, he mumbles, right?
Fed, but I think obviously he's joking. With the Fed. Obviously, the Fed takes steps to remove things like energy and things out of their equation. But you're right. It does. In real world, you just have to pay for gas, right? You have to pay for oil to heat your home.
Gas is murder right now. Gas is brutal right now.
And, of course, the oil prices factor into just about every other good you buy. So the cost to transport that side of beef or that package of cereal, whatever you're buying at the supermarket, is going to be factored in. So, yeah, as it keeps ticking up, that does weigh heavy, and I agree. They do pull out the energy from these numbers, but you're right. There's a little bit of a different story out there. Here, let's see. That's an equity one. I think we'll save that for when a couple equity ones here.
Isn't that the FANG stocks that he's talking about pretty much there, or what?
Which one? Oh, the equity indices. Has anyone ever put out an index with the top 5 or 10 names by market cap in the respective indices? Seems like you can get the lion's share of the move in the big indices like Spire, SPX, just a few names. Yes, you could. I think the FANG, you get hit on the head there with FANG. You're right. I'm sure Russell has some crazy one they've made as well, so I'll have to get Sean's 2 cents. He lives in the index listing world. That's kind of what he does. But you're right. You can get that with FANG. If you take the FANG names, you're getting, I forgot what ridiculous percentage of S&P movement, but the lion's share of it you're getting from just those handful of names. I think Nick, well done. Look at you being an equity guy here. This is interesting. Let's wrap it up on this one. I remember we had our guest from a few weeks ago coming on the show, and from CME, and he was very bullish about the steel futures and the ferrous metals. Remember he thought that was going to be the next hot thing.
Yes.
And then
people. I believe he had a new child because I'm getting a vacation response from his email.
Really?
So
That's
congratulations.
right. He had to depart at any moment for the show. You're right. So yeah, congratulations to him.
He was stealing himself for the ride.
Oh God! Now I'm going to mute you for the rest of the show. These puns are painful. This is what happens. You give Nick a hot mic, listeners, and this is what you get as a result.
Hey, look, I'm all by myself in this office in my briefs. I need to do something.
You got to do something, to keep the air flowing, feel good, feel cool. But people are responding to that. They tweeted that. Actually, you tweeted out some stuff there about the futures open interest chart for the HRC steel futures. People chiming in, asking about, is there a spread between that and Shanghai? Obviously, Shanghai has the rebar futures. And that would actually be pretty interesting. So if what he was predicting comes to pass, if these CME, ferrous metals contracts really start lighting it up, and he had a good point. The trade war has kind of brought these things to light in a new way that maybe it wouldn't have 6 months or a year ago. That might be interesting, and certainly our back and forth would certainly pop up. That's one of the other big metals contracts out there. So I don't know. I'd be very interested, and I should give them credit here. Tristan Hubbard, aka Phantom, was suggesting spreading between the two.
I've talked to him before. He's a Singapore guy. I think he works in Singapore, so he's like he would know both markets because I think he trades CME hours, but is also the Singapore markets as well. So.
Yeah, I'm down for that. So hey, that would be awesome to see if these contracts light it up on CME. We start seeing some international ARB, which I'm sure we will. We'll break it down for you here on the show. That'll be fascinating to watch. So from your lips there, Phantom, to the market's ears, hopefully we'll see some stuff popping off. Unfortunately, that's it for us popping off here on the show, Mr. Nick. You can put your pants back on. We're done.
Just doing it now.
But before we go, Mr. Nick, you got dark mode, you got other cool stuff. What you got up your sleeve here for people who want to try their hand at quick strikes?
What I got up my sleeve? So coming weeks we'll be doing some releases, some releases to new tools. I can't quite divulge them just yet, but I think there'll be some interesting ways to look at the market and some, let's just say, some ways to alert you that things are going on. Also excited to announce that the @Macro Hedged guys will be on We'll be on TWIFO in the coming weeks because they got approved over at the CME, so we'll be able to get them on and talk.
Cool. First time hearing about it. Cool. I like it. I like new guests.
Yeah,
It's always fun.
Oh, I thought, because remember we tried to get Adam on a while ago. We had.
I do recall, sir. But that's exciting. New guests are always fun.
Yeah, and he's got that nice macro hedge service, which is doing gangbusters this year so far, but a lot of good directional and options trades. So I'm excited about that. So that'll be coming out here to talk to you guys to see when we can schedule them. And then, we'll have some. We're making some good progress. There's some new tools coming out in the CME that will help people with their margin thoughts and processes. So, as it's ready to go, we'll announce it and show you where it's available.
There you go. And if people want to check them out, or they want to check out, you have all these new bundles for pricing, Nick. Where should they go? What should they do?
You can go to Bantix.com and click on the pricing link. That's the easiest thing to do. The URL is too long. Bantix.com and click on the pricing link. We do have those individual tools that are available for $300 per year. So you can get TWIFO, fully functional TWIFO with all the stuff we talk about, $300. Spread Builder with everything, saving, historical view, all kinds of plotting and P&L, $300. And also the Quick Options Education Tool, which will help you learn options visually, as opposed to just reading a book with numbers in it, $300 a year. So lots of opportunities there for you if you are interested.
There you go. Check it out. $300 for the year. It's a pretty good price. Take it from me. We look at a lot of platforms, do a lot of things here on the data and analytics side. You can't get a lot for $300 for the year, trust me. But you can get Quick Strike. So head on over and check it out. Kick the tires and light the fires, as they like to say. While you're checking things out, of course, Sean couldn't be here. Head on over to FTSE Russell, FTSE Russell.com. Great data, great analytics. Give them a follow on Twitter as well, at FTSE Russell, while you're at it. All the stuff that you like to see about premium harvesting and overwriting and buy right stuff. They got all that for you. Just give him a follow while you're at it. He'll be back on soon, hopefully, to talk about the impending launch of the earth-shaking micros in the equity space and a bunch of other stuff. Why Russell's on a tier of late. All sorts of good stuff. We'll get into that soon. And, of course, always CMEGroup.com/TWIFO in between shows to catch up on the latest reports. You can get them all there, not just when the show's live, but throughout the week. And, of course, check out what Blue and the rest of the team are working on the educational and analytical research front there as well. And on behalf of Mr. Nick and Sean, wherever the heck he is, Heather and Jan, and our friends over there at CME Group, and indeed myself, I thank all of you for downloading, streaming, subscribing, or sending in such great questions with so many different products. We could spend 3 hours on the show if we wanted to. So keep those questions coming. We love to hear from you. And we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.